Hey there, YouTube. Some time ago, I did a quick questionnaire on the YouTube community page and just asked if anybody was interested in swing trading. I do so much day trading type content, and since launching my Discord earlier this year, I've received feedback that a lot of people just don't have either the interest or the time to do day trading. So just started to put feelers out there and just recently launched our swing trader program for our premium members. I'm also putting out some of the stocks that we're watching in the free section, just because I want to give opportunities for people to engage, whether they're supporting us monetarily speaking or not. So I created this layout in order to somewhat closely approximate some of our premium tools. So our premium tools do a lot of the heavy lifting with building out screeners, building out relative strength measurements that are somewhat similar to Investor Business Daily. There's just an immense amount of computational power in our tools, but I realize that not everybody has the time or the finances to invest in that. So I wanted to create something that is somewhat of a close approximation. It's going to have a lot more manual work involved, but I do think overall, like it's not a ton. So I'm going to create this video for the folks in the free section of the Discord, just the open free community. Everybody can join. And I created this layout for them. And so this video is for them and anybody on YouTube that has an interest in swing trading. And this is going to closely align to our trade models for the Discord, where we discuss on our swing floor all the different trades that we're looking at, the stocks, and talking all the all the measurements that we use. So without further ado, let's go ahead and get into this. First, right out of the gate, I just have to make sure and mention my disclaimer that none of this is financial advice. This is for educational purposes only, and it is up to you to risk your money in the markets, and whatever decisions you make, they are yours alone. There's nothing here that is going to be advice from a standpoint of like where you should put your money. If you need help with that, definitely seek proper legal, official financial counsel. So we're going to discuss very quickly the main foundation for how I run my swing trading program. And as I go through that, I'm going to go into kind of the rough approximation with some free tools I found. Some of them I made myself. So the foundation for what I am teaching folks in the Discord is a couple things. One, we got to track the sectors. So there's a handful, like 11 sectors. I use the spiders to track them. So we got technology, we got healthcare, industrials, communications, consumer, etc. So those are our sectors. We want to engage in stocks that are aligned to sectors that are very strong. And how do we measure strong? And how do we gauge that against something? We're looking at a SPY. It's going to have the best bang for your buck for most people. They put their money in SPY. That's the solid benchmark that most people use. That's our benchmark, and we measure the individual sectors against SPY. So we do that to just from the very get-go decide which sectors are worth engaging in, which ones are going to be worth the risk and have potentially the best upside potential. And so how we do that is with some proprietary tools. How I've done it for this free layout that I have made for the Discord, and for anybody watching here on YouTube, is actually using an old indicator that I made a while back, I think like a couple years ago now, called the Spider Tracker. And this one here prints out dynamic plots based on what indicator you choose for all the different spiders. So you get Hey, all the spiders are here on the table. You get the indicator value, the price change, and the volume. And so for the free layout, I chose RSI. It's not a relative strength in the same terms of like what we're using elsewhere and what other companies will charge money for. They're looking at computational analysis using historical to current price against a benchmark on a quarter by quarter. Typically, they might even use like a bunch of rack computers and crunch individual stocks for a basket of stocks, like for a particular sector or a market theme. So RSI is not going to do that. It's just using the individual ETF price in the last 14 bars. So it's just something, though. Like, you need to be mechanical with this. You need to have a measured analysis in order to be consistent. So this is the one I chose. Just heads up, I use RSI a little different than what I think a lot of people do. I'm not into the whole overbought, oversold thing most of the time. I'm more about, are we over or under 50 for a bullish or bearish outlook, respectively. Specifically with this, anything over 40, I'm going to say has some strength. Anything over 50 or 60 is going to have a lot of strength. Anything beyond that is going to be mega strong. So that's what we're mostly interested in, is anything kind of at that 60 or above for in the sectors that we're interested in. So we're looking at XLK, we're at 74. Healthcare, 68. All right. So these aren't sorted or anything, but we can see SPY's own strength. Of course, we can't really measure SPY against itself, but it's 68. So overall, like, we're looking pretty good, right? We want SPY to be pretty high on its own. That's our benchmark. And so seeing XLK, for example, tech is over 68. That gives us a good, very recent gut check that tech itself is stronger than SPY, which, if you've been in the market, you probably already knew that. Healthcare, for example, strong just of its own price action, but against SPY, it's basically the same. So it might be one not to engage with. And then these other ones, they're all under 68. So I don't know that I would really even engage with them at all. All right, so that's kind of how to use this information. The same readouts on the price axis here, so you can use that. And then also we want a lot of volume. So SPY itself, we're seeing 56 million volume, and of that, we're seeing a lot of that poured into healthcare and tech. So that's good to see. Utilities isn't too bad. I would maybe take a look at that. Again, we're just using RSI here, so seeing 11 million volume, and that's pretty good. Finance is also another one, 32 million volume, but RSI is kind of weak on that one. Again, I'm not claiming this is relative strength in the more proper sense, but just kind of reading that out. All right, so then the main layout here, we've got a very simple layout. So the premium tools that I have made do things a little different and have a lot more information that's beneficial for trade management, but I've got to reserve my time and training to folks that are really invested in this. So for free, I've modified a Donchian channel indicator, just the upper plot, left it to 20 because we actually look at highest 20 rolling closes. So this is highs, not exactly the same, but it gets a close approximation. So anybody in the free section of our Discord, when you see my posts using our premium tools, you can mostly track along with just this layout. And then this is a modified RSI here. So 14 period RSI to match the spider sector outlook, but I've adjusted the band, the oversold band. I just kind of converted almost like, engage or don't. It's like a 40 line here. Put a little green backfill just to indicate to your eyes anything in this area is grounds for potential risk on. And then we've got the EMA cross cloud indicator. I made this a really long time ago. and it's just 821. I made some modifications, and I'll share the link to this layout in the YouTube Discord, YouTube description, so you'll be able to find this stuff. All right, so we're going to go over, I'm going to try to keep this video short. We're going to go over a couple of critical aspects here. So one, volume, very important. We got to have volume in the average plot down here. And I have 3 main entry models that I cover in my Discord. One of them is a breakout with a new high close. So we actually got that here on this candle. We didn't quite get it here. I mean, maybe we did. This plot's it's not the right one that I look at. So either here or here, it doesn't really matter. But once we get this, okay, this is what I would consider a breakout. We're pushing this channel higher, and we're seeing above average volume. Now, I really like to see a double. 1.5 times is okay. Now, you've got opportunities here with a breakout. You could start a campaign on this one. Tend to find breakouts are often kind of sold back down, and I'm willing to be patient. I'm willing to miss the initial breakout move if it does occur. It's quite rare, and I'd rather wait for a cloud retest. So looking at the trend, anytime price is within 1.5% or dead on, those are areas where I'm going to be the most interested to start a campaign after a breakout. So I just call these like breakout cloud retests. All right. So this one here is one where I would start to look at maybe starting a position. And then when I'm looking at these, depends on my time horizon and other factors, if there's any earnings or dividends or news release like FOMC or any economic thing like jobs, jolts, all those are things that I might decide not to engage until after the event. But let's say, for the sake of this video, that none of that's happening. So I can risk, potentially the cloud low here. I can risk about 5%. And so I would like to achieve at least the same on the upside. I'm going to keep it consistent, so I'm looking for a 1-to-1 effectively. Seeing within 1 day, we're getting already 6%. If we held 2 days, we could look at maybe 10%. So the clear target typically is, so we're looking at these breakout candles, and wherever that clothesline is, that's kind of typically our first target. And then anything past that is gravy. If you can remove risk and leave the rest as a free position, then that's the best kind of scenario. But I think getting started, if you're just watching this, you've never engaged with the market this way, would highly consider paper trading, and maybe just doing like 1 share or something. Just keep it very simple. And then there are other ways as well to manage your risk, and we could do options, but we'll save that for another video. So we've got the breakout model. Again, you could enter here, but as you can see, there's a lot of possibilities for dips, and so that would just be kind of a overall very painful experience. Back to the cloud, you're in it for 6 days and you're down 5% or so. You did see 7% rise, but that was after a 5% drawdown. So I like to get into these. There are specific circumstances where this might make sense. I'll save that for another video. Another potential entry is what I would call like a complete dip candle. And that's where, so you notice this one, the close is above the cloud. And then we've got all of these that are within the cloud. So these are true dips. We could also see them below the cloud. So it's a bullish cloud, but the candle could be completely underneath it for some reason. These are good opportunities as well. The volume on them is even more important. So when we get these sell candles, I want to make sure that these sell candles have low volume, but way below average. And so we're seeing a lot of that here, so that's great. Now the next thing is I want to see a breakout of that dip candle. So we got dip candle here. I want to see a breakout of the high of that dip candle, and it does not have to be exact, all right? But the important thing is that buyers are stepping in where the sellers were able to kind of take us down. Now the thing about it is I want to see good volume. I want to see above average volume on these, so none of these are entries. All right, we don't really get the next clean setup, so we get this one here, and then we get the next one. Unfortunately, our next breakout, I believe this was some government news, but we get the next one, and it's a massive gap. This one's like close to close, about 22%. So this one here, I mean, that's awesome if you're already in, but we don't get that one. So now we're waiting for, we're going to try to get close to the cloud. One thing about cloud entries is in the hindsight view, looking at these, the EMA cloud might have been much lower intraday until this thing closed up here. So just because you can see it here doesn't mean that that's where the value, or the value of the EMA was actually at. So you have to kind of use some discretion there. But we do see some above average volume. So that's good. You could even try to get in here, look for a break above these highs here. Any way you can decide to engage with the market based on your own experiences when you're trying this stuff out. Just as long as you're maintaining some kind of mechanical measurement. But yeah, so we're getting these above average moves. We know already we're riding a market theme, strong sector support, and away we go, as they say. Seeing quite a rise over the past week or so. So those are like the three models. Again, if you're in the Discord, feel free to ask questions. We have a free trading discussion area, and I would love for you to engage. If you're just watching this on YouTube, you're not in the Discord, why don't you come on over? If not, feel free to ask questions in the comment section below the video. So we're going to go ahead and cut it there. It's three models. Take a look at them. You can build scanners inside of TradingView for sectors. You can add in EMA information, analyst rating. You can do a handful of things in here to find these dip candles, and to find, you won't necessarily find like a breakout cloud retest, but you will definitely find anything that's on the cloud, and then you can look back to see if there was a recent breakout. So hope to see you in the Discord. Feel free to leave a comment, and as always, thanks for watching.